Well, today was a up and down roller coaster of a day, and I made a lot of trades, not a lot of good trades, obviously. We're red on the day. I'm going to talk about kind of what went down. Instead of showing like 500 different trades and wasting all of your time, I want to talk about one very simple thing here in this video today, and this applies to stocks, crypto, futures, and all of that fun stuff. Talking about it right here in this video, so make sure you stay tuned. What's going on, guys? Patrick here, and like I said, today was a bit of a up and down. You can see my P&L here. We're down $58 on the day, which doesn't seem like a lot, but earlier I was down $200 today, and it's just a very frustrating day for me personally, because I kept making very similar mistakes and kept doing stupid things that is like, let me try this again, let me try this again, let me try to get the breakout. And I did it 3 or 4 times, anticipate a breakout 3 times in a row, and each of those times it failed. So then I tried to short, and we'll show you guys kind of the setup here, and pretty quickly you will see kind of what we are doing. So right off the bat this morning, 9:30, the market opens. I took a trade here. You can probably pull up my trades here, so you can see, yeah, a lot of trades over traded the crap out of it today. Did a lot of over trading, which was pretty number one reason of having a red day was the over trading. But also, a lot of this isn't just like, not every single one of these are like entries and exits. It's more so a lot of these are like me scaling in or scaling out and things like that. It's like, it's too much. I can't even see what's going on. So let's just get rid of that actually. But you guys can see I made the trades at least. So the market opens here at 9:30 this morning. Out of the gate, we had this 80 level that was kind of holding. Thought we might get a breakout. Well, I was like, okay, cool, we're going to get a breakout here. So I went long at the 80. It pushed all the way up here to 84. And at that point, I was up like 40, 50 bucks. I should have taken profit, but instead I was greedy. And I thought, well, this is going to go to the moon. You know, it's going to break out and it's going to just rocket from here. So I'm going to hold. I'm going to be patient. I'm going to be greedy. And, well, it ended up just smacking me in the face, and I ended up getting stopped out down here, I think like in the 78 area. So my entry was at the 80s there, stopped out at the 78. So ended up my first loss of the day. So after that, I kind of waited and watched, and then after we had this kind of bounce at this level here, this 75 level, I started to, basically draw some trend lines on the chart. And as you can see, kind of that downward trend that we were in, that downward channel here, that was pretty evident as well, even from like last night and that action. But I'm really kind of focused on the market hours, like 6 a.m. past, because sometimes these nighttime moves and futures just do crazy things. But just getting back to the overall idea of this downward trend, this downward channel. So the market opens, market pulls back, and guess what? I was like, oh, it wants to go again, right? It wants to do it again. It wants to go to the moon. So I ended up jumping back in here at the 80 level, thinking that we might reclaim this support there. Jumped back in at 80, and guess what? Another failed breakout from there and got stopped out again. So at that point, I was down about 100 bucks. Now, the issue for me was that I identified right off the bat, if we go to the 15 minutes, easier to see, I identified what? We had support at what level? We had this support right there at that 73. I identified that. I knew that was there, right? I could see there was a support there. That was the previous highs on these candles. We always talk about when these resistance areas turns into support, that's always very bullish. And guess what? That's exactly what happened. We had a kind of a double top the previous day, yesterday, double top during the market hours, which is always better to see instead of after hours. But double top, we break through, we pull back, and then it's off the races after hours. But that 73 level was very evident that that was a support level. Now, if you look at the bottom of that candle here, the bottom of that candle, the low was 73.50. So pretty much right on the dot there. So I ended up going long at that point. I think I got in like the 75 area there, 74. Ended up going long here and ended up taking a small profit. Put me a little bit, it was like, okay, I had a green trade after 2 losing trades. Like, okay, this This is good. I feel good about it. This is all right. Well, and then it just went to the moon. Now, the lesson here is, number one, when you identify that there is a solid support area, when identifying that there's, a channel, that there's a support, and what is going on with the trend, when you identify those things and the actual price action goes to that level, when it gives you that sign, like, okay, you have identified that there's support at the 73 level, you identify that there's a trend, we're bouncing off that trend, we bounced at 75, we bounced to 73, at that point, looking at where that next trend line is, being the top of that channel, that should have been my target, my actual target from there. But instead I took small profit, and it did end up going up 10 handles. So that's from 73 to 83. And that applies, like I said, to stocks as well. So if a stock pulls back to a previous resistance support area, bounces twice, and then you can see that there's an obvious trend going on there, that should be your target. So if I'm entering here at the 74 level, your target should be here at the 82. Now, I know this is obviously in hindsight, but that should really just be a rule no matter what. For me personally, that if I'm entering a trade like this where I identify that there's support, I identify that the trend is there, all that stuff's going on, if I'm identifying those key variables, those key factors, and I got a good entry, well, my target really should be at the top of that overall trend again, because we know, that stocks move in waves and they go like this, and they like to go up and touch those trend lines, and there's a reason that these trend lines work. Now, obviously, they're not always going to be spot on, but there's a reason that trend lines work. Now, let's talk about where I really failed again. Now, if we go the 5-minute chart here, guess what? So after we bounced there, I sold here for a small profit. We then rallied up here to the 82, 83 level, and I'm thinking, okay, well, we're finally going to break out here. This thing's going to go to the moon. Let me go. Let me get in on this. And guess what? I ended up getting long here at the 82 level, thinking that, okay, the high on this candle is 82. Well, I'm going to get long if we break above that, and we ended up getting above that, but guess what? We got smacked back down. So I'm long at 82. I get stopped out down here at the 80 level. So now at this point, I'm down like 150 bucks. I'm like, are you kidding me right now? So that's 3 times trying to time this breakout, trying to anticipate a breakout, knowing that the trend is pointing down, knowing all these things are happening. It's not rocket science. You can see where the trend is. We had a, lower high, lower high, lower high. So at that point, guess what I tried to do? I tried to get short, right? I'm going to get short at that point. Guess where I got short at? I'm sure you can probably figure it out. I ended up getting short at the 80 level, thinking, okay, cool. We're going to break back down and touch down here to this level again. We're going to go right like that. So we ended up pulling back. I was up a couple dollars at that point, from 80 to 78. I'm in the green a little bit. But then guess what? Boom, we rally back. I get stopped out up here. So at that point, I'm down like 200 bucks. And yeah, it was just bad. So the moral of the story, the lesson here, is if you're going to draw trend lines, if you're going to identify a trend, if you're going to see the actual trend, well, you should probably trade off of the trend lines and trade off of the trend. Also, looking for this breakout here to the upside, we can see that we had lower high, lower high, lower high. But then, after getting this lower low, we had this low here, had this low here. This is kind of like a higher low a little bit, but you can see it still got denied at that trend. So we made this low down here to the 73, 75 area. On the 15-minute chart, it'll be a little bit better. You can see kind of that low here, pushed up. We got stuck, still trending lower. Had this little bit of a higher low. The market opens. We pull back all the way down to here. And then, guess what? Back to that trend line. So kind of forming that same pattern as earlier. Bang, bang, this area here. This 80 level, as you can see, this 80 level here, right there, holding at that 80 level. We're holding there. And at that point, it's like, okay, now what should I do? What should be my entry at this point? Where should I be getting in for this breakout? Seeing that we're pulling back and we're holding this, kind of making this higher low here, higher low there. Seeing that we're making that, this should really be kind of my entry area, right? Not trying to time the breakout at the top, because if this does fail and doesn't want to break through, well, the drop back down, to that low is a much higher. Risking off of this area here, really kind of letting this form, and then risking kind of trying to get the entry here. Let's say I get an entry at the 80s, and then my risk really is like in this area here at the 78s. And well, look how beautiful that move was from the 80s back all the way up there to 88. So that was the breakout, the move. Really, I guess I could have waited for this breakout here and then got in at the 81s, kind of because it kind of ended up being the same move anyway. But I ended up getting in there at the 80s and selling up there 87 area. And you can see how much easier that trade was. It was so much easier when I'm actually, you know, following the plan, following the setup and seeing the setup and being able to identify that setup. So number one, I identified that the 73 level there was support. I had the trend, I had everything going on, just wasn't able to really maximize that opportunity. And that's the thing, is when something sets up so beautifully like this, when it sets up so beautifully, hits those supports, hits the trend and all of that, really got to capitalize off that and look for opportunities when all those things are lining up, instead of, you know, getting in, taking profit quickly. Really, this should have been a home run trade from the 74 area up there to 84. And then again, this should have been another home run trade from the 80s up there to 87. So, you know, if I wouldn't have tried to anticipate a breakout twice here on these candles, because here's the difference too. If you look, number one, okay, we go we go all the way up here. Now, we haven't had a pullback. So, like, if you get rid of these candles, what do we got? We're just all the way up, all the way to the 83. So, from the 73 area all the way to the 83. We have no pullback. So, if I'm buying at the 82, well, where's my risk at there? There's not really any risk. The only risk that I have support is like maybe, what, 77, 75, all the way back down there. So, me buying here, terrible idea, right there again at that resistance. So, we pull back. We start to find new support in this area after that failed breakout. This is where I want to be buying for that anticipation of the breakout, not buying right at the resistance area. And the same thing happened right at the open as well, because look at this candle. I got in here at the 80s. We got stuck right there at 84, which is that previous high on that candle right before the market opened. We got stuck again at the 84. I was greedy. I didn't take profit, and it ended up biting me in the butt. So there it is. Like I said, this applies for stocks, cryptocurrency, futures, and all of that fun stuff. If you guys enjoy these videos, do me one big favor. Hit that like button, subscribe button, and all the buttons down below. I will talk to you guys later on.